Laurus Labs is gaining today on the back of its numbers. Lower taxes aided the company's bottom line. However, the company's operational performance too remains strong. Let's discuss the quarter gone by with Satyanarayan Chava. He is the founder and CEO of Laurus Labs. Mr. Chava, thanks very much for taking out the time to call the quarter gone by into perspective for us. Operationally, it was a stronger quarter despite obviously the bottom line getting aided by lower taxes.
Yeah, good afternoon. So this quarter we have demonstrated why we have invested very heavily into formulations over the last 4 years. If you look at our numbers, formulations we did 160 crores. Overall for first half we did 266 crores. That was the investment we started doing from 2014. We had almost 400 crore glass block invested in the formulations and about another 300 and odd into the OPEX. That turned out to be very, very positive for us from Q1. Q2 we did very well, and we expect to do even better in Q3 and Q4 than what we did in the formulation front. In the synthesis front also we are doing very well, CDMO space. In the generic APIs, we have seen some sluggishness, especially in the antiretrovirals, because of less offtake from our customers for South African market. Otherwise, the EBITDA increased significantly from 15, 16 to almost 20%. And also profitability went up significantly because of operational leverage what we have achieved in Q2.
Okay, so the formulations business you're saying is looking good. Could you give us give us some light in terms of what the order book in the formulation business for the rest of the year could look like, and also throw some light on why there's a struggle in the API business.
API business we have to divide into three broad buckets. One is antiretroviral, oncology, and other APIs. Oncology we have done very well. Other APIs also we have done significantly well. We did actually year on year almost 60% growth. With oncology also we did almost 28% growth. Whereas the ARV we did 23% less than what we did in the last FY19 Q2. Overall ARV business is gone down, but rest of the API business is doing very good.
So margins were aided by lower costs. 19%, is that something that's sustainable?
You mean EBITDA?
Yeah.
Yeah, it is very sustainable. We expect that could be the new base for us to grow EBITDA.
All right, so from 13% to 19% this quarter, you're saying the new base is going to be 19% and you're going to be able to maintain 19% going forward as well?
Yes, yes.
So, sir, are the raw material prices still soft because that operating leverage was achieved due to that in the first half?
These are the two reasons. One was the raw material prices from China softened than the previous quarters. And the second, if you look at our Q1, we did around 550 crores. So the Q2 we did some more than 710 crores. That was the operational leverage we achieved. These are reflected in our numbers.
Okay. Your bottom line was boosted because of lower tax rate as well. Sir, could you tell us what will be the effective tax rate now for this financial year for your company?
We expect in the similar range, around 15% effective tax rate for the rest of the year.
Okay. A word on your net working capital days. You can correct me if I'm wrong. I believe they've gone up if I compare it to last year, and the number which we have is about 140 to 47 days. If that's correct, could you just give us a guidance? Will this number come down in the second half of this financial year?
It will come down marginally because the business profile is changing from pure API driven to significant revenue coming from formulations. So the little bit of extended inventory days and all, that was reflected in our that number. But we expect to improve it in Q3 and Q4.
Can it come down to from current 145 days?
Yes.
No, so the current is 145, 147 days. I'm asking how much can it come down to in the second half of this financial year?
It's not going to be very significant because our formulation business is going to be better than our first half. So it will come down, but we can't tell you the exact number, but we are carefully monitoring that and it will come down.
Could you give us an idea or a snapshot of what the R&D spends could look like for the rest of the year?
We did spend about 80 crores. That translates to little over 6.5% of our revenue on R&D. We expect the H2 also will spend a similar number. So it will stay between 6.5% to 7% of our revenue on R&D.
Okay. Just a final word before we let you go in terms of if you could throw give us a guidance of sorts, as to how much could we anticipate in terms of growth going forward for the rest of the second half of the year from Laurus?
See, we are not giving a guidance to the street, but we can tell you we are in a good order book, so the H2 also looking very good for us.